Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys, let's take a look again on the gold market. So today in the gold market we could discuss only the managing of the stop orders and considering what could happen next. So right now it's most sweet job for a trader when you have the good position and you think how to manage your stop, where you could move it, and you consider the chances on the further development of the price action. So you can see on the daily chart, our second target is hit, 1790 top, and this butterfly is completed, and theoretically some reaction on the butterfly target should follow. So at least some respect here could happen. Next target that we're considering potentially, we do not know yet whether the market will go there or not, because price action here was relatively gradual. We do not see any explosive type of action here through this target. Candles are small, trading range day by day is not really very significant. So this is gradual appreciation of the price right to the target, and it increased chance that the pullback here could happen. But it doesn't mean that market can't proceed higher to the 1823. Besides, if you'll take a look at the 4-hour time frame chart, you could see that, well, this market moved above the OP. It turns simultaneously in the extension leg that should lead it to the next target, the XOP, especially when you do not have any resistance above the market. Why a market is relatively simple currently is because it has no overbought, no fib levels. It stands in the free space till the 1880-83 area, and that makes it more simple to reach the target. So currently I wouldn't deny totally that market could proceed higher. The XOP target is 1824, which is actually coincides with 1618 extension of the daily butterfly. Theoretical, classical target of the head and shoulders, as you can see, with this distance from the bottom of the head to the neckline, counted in the direction of the breakout, points at the same level as the XOP. It stands just a $2 difference, 1821, 1883, so mostly in the same area. So let's consider what to do currently when the market hits the 1790. On the hourly chart, there's a few scenarios could be. First of all, take a look how perfect our stop has worked. Yesterday we said when the grabbers have been formed that maybe we will get lucky and market will show the 30% pullback. And we recommend to take a position at the minimum retracement right inside of this consolidation, because we said that it's very probable that the explosive action here could happen. That it has happened. So you can see here is fast action, sideways consolidation. Here is again sideways consolidation right to the target. I see two possible ways how market could respond. And what is particularly important is to consider reaction of the price to the important fib levels. In two words speaking, breaking of the major fib levels suggests deep retracement. Holding of the major fib levels suggests minor pullback and upward continuation to the 1823. These fib levels also tell you where you could tighten your stop order. But here you probably see it by yourself. It's not really very difficult. So currently you can see the market is forming some shape that's potentially could be kind of the head and shoulders or something of that sort. Because you can see market here stands at 127 extension. And that could be 127 head and shoulders patch. So that could be left shoulder, head, and could be right shoulder. In this case, market could show deep reaction, some retracement, response to daily butterfly pattern. But to be sure, that's definitely head and shoulders, but not just minor pullback. On the way down here, on the slope of the head, market has to break all these fib levels and especially drop below 1764 area. That will be decisive moment, the breaking of the balance of the equilibrium between the bulls and bears. In this case, the bears will take the lead. Why? because on the way down, market first will break the conference support that's really strong. Second, the consolidation starts to work at a strong support, and if market will return a big down and break through it, it open road to this area. So it'll be free area for a market to move. Besides, in this case, market will raise recent rally. That also will be some kind of reversal, bearish reversal action. That also gives you the hint and tells you that something is wrong with the bullish scenario, and market seems that market is reversing down. That's why currently you could combine some different approaches to your position managing. Ultimately, you could close everything and just wait for the response of the market, because at least some minor pullback here should happen. Some 1780, 1773. So here you could then reestablish your position at the same level, for example, with the stops below 1764. That's the first approach. It's the ultimate approach. Second approach, you could tighten your stop below these lows, grab the half of your profit here, book your half of the profit, and see what will happen. In the case of the minor pullback and an upward continuation, well, you will keep your 50% of your position, and you do not depend on the depth of this retracement. You do not know whether it will be 30% or maybe the conference or maybe deeper, and you have an insurance that market could show just minor pullback and then reestablish upward action. In this case, you will be within the market. So that's two major ways how you could manage your position, and just choose what you like more. Ultimately, from the other side, it's just you could keep the whole position, not booking the profit and just move your sides here. But I wouldn't recommend it, because, well, our task, guys, is to get profit from the market and not get the big swings, not trying to catch the big swing. You could get the big motion, but you could earn nothing if you miss the right moment for profit taking. So the trading is the dealing with the probabilities. When you get the profit, you need to diminish probabilities of the loss. So it means that you definitely has to book some profit, and then manage the rest of your position. That's more healthy approach to the managing of the profitable positions. So that's what we see currently. So let's see what will happen. I suggest that the chances on the pullback 1780, 1773 are significant. So some minor pullback here definitely should happen. Well, and then we'll see what will happen. Breaking of these levels suggests deeper retracement, maybe hand and shoulders or something of that sort. Holding above this area as well, keep valid scenario with the action to the 1823 area.